Welcome to our tax-saving video series for tech and real estate entrepreneurs, where you'll discover valuable tips for business growth. With your host, Sammy Basta, CPA.
Hey there, who doesn't love a good excuse to buy a new car, right? So imagine, telling your spouse, hey, I'm getting that slick Porsche, and it's not just a dream, but actually it's a smart move to reduce our tax bill. In this video, I'm going to break down how you can potentially deduct the entire cost of your next vehicle purchase. Two ways to deduct vehicle-related expenses. As a business owner, you might use your vehicle for business errands like visiting your rental properties or going to the bank or attending seminars. There are two main ways to deduct your auto expenses. Standard mileage deduction, number one. Number two is your actual expense method. First up, the standard mileage deduction. This one is super easy because you just track your miles you drive for business and multiply that number by the standard rate. For 2024, 67 cents per mile. So here's an example. If you drive 6,000 miles for business in 2024, your deduction would be $4,020. That translates to about $965 in tax saving if you are in the 24% tax bracket, or $1,487 if you're in the 37% tax bracket. This method is perfect if you use your car for less than 50% of the time. So next, we've got the actual expense method. This one is a bit more detailed because you can deduct the business portion of your vehicle expenses if you use your car more than 50% for business. This means that you have to track all your expenses like gas, insurance, repairs, maintenance, and even depreciation. So here's an example. Let's say you drive in 2024, you bought Ford F-150 for $50,000. You use it 75% for business. In the first year, you can deduct up to $21,675 as a bonus depreciation. For someone in the 24 tax bracket, this means $5,200 in tax saving. And for those on the 37 tax bracket, that's about $10,693 tax saving. A smart move is to buy a vehicle at the end of the year and use it entirely for business to maximize your depreciation deduction in the first year. But remember, if you do that, then you must keep using it more than 50% for business over the next 5 years to avoid paying back some of that depreciation. Now, you might wonder, well, whether should I buy or lease your next vehicle? And there are pros and cons, and let me share them with you. If we're talking about buying or leasing, let's talk about buying your car first. Buying your car allows you to take advantage of the depreciation, including bonus depreciation for qualified vehicles. And this means significant tax deduction in the first year. On the other hand, you may want to consider the higher upfront cost and the long-term commitment. Okay, if you lease your car, lease payments are deductible based on the percentage of the business use. So you don't have to worry about depreciation limits. But on the other hand, you don't benefit from the bonus depreciation, and also lease agreements sometimes include some mileage limits and other restrictions. Okay, the second, biggest question that we always get, registering your car. Should I register the car in my name or in the business name? And that's a key decision that, whether you register the car in your name or your business name, there are a lot of pros and cons for each option. Okay, let's hit it first. The first option is registering the car in your name. It's simple, simple paperwork, potentially easier financing options, and you can still deduct the business use of the car. On the other hand, you may be personally liable for any accidents or legal issues if the car is in your name. Now let's talk about registering the car in the business name. It limits your personal liability in case of accident or legal issues. Also, potentially, it's easier to prove the business use for tax purpose. On the other hand, it may require more paperwork, so possibly higher insurance costs, financing options might be not available and be more complex, but it may put the whole business at risk. Because think about that. You get in a car accident, you're driving a company car, bad actor may get the idea of suing your business just for the money. Getting tax-free money from the business is one of my favorite methods, and here's how it works. You drive your personal car for business errands. The business reimburses you for the business use of the car, so that way the reimbursement is tax-free for you as a business owner and it's fully deductible for the business. However, if you're going to do that, you want to make sure that you create and sign an accountable plan. This is probably just a piece of document that you have to keep it in the company records, and this plan outline the business use for your personal car and ensure the reimbursement is tax-free. So the bottom line is, by buying a qualified car and using it more than 50% for business, you can potentially deduct a significant portion of the car cost in the first year, thanks to bonus depreciation. But the trick here is to buy the car at the end of the year, use it 100% for business at the first year if you can. Then you want to make sure that you stay using the car for more than 50% for the next 5 years to avoid paying back some of the depreciation. So just remember, while bonus depreciation is still available in 2024, it may decrease by 20% each year until it goes away in 2026. So whether you decide to buy or lease or register the car in your name or the business name, understanding the tax implication and your personal liability and legal issue can help you make the best decision for your business. I want to thank you so much for watching, and I'll see you next time.
This has been another episode of our tax saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening, and have a great day.